Welcome to this video about how multinational corporations avoid paying taxes. Multinational corporations, also known as multinational enterprises or MNEs, are companies that operate in multiple countries. These companies have significant power and influence, and they often use various tactics to minimize their tax liabilities. Welcome to this video about how multinational corporations avoid paying taxes. Multinational corporations, also known as multinational enterprises or MNEs, are companies that operate in multiple countries. These companies have significant power and influence, and they often use various tactics to minimize their tax liabilities. One of the most common tactics is transfer pricing. This involves moving profits to subsidiaries in countries with lower tax rates. For example, a company may sell goods or services to one of its subsidiaries at an artificially high price, which reduces the profits of the subsidiary in the higher tax country and increases the profits of the subsidiary in the lower tax country. Another tactic is to use offshore tax havens. Some corporations use countries with very low tax rates, such as Bermuda or the Cayman Islands, to shelter their profits from higher tax rates in other countries. These tax havens often have little or no corporate tax, and they also provide strict secrecy laws that protect the identities of the companies and individuals who use them. Another complex tax avoidance strategy is double Irish with a Dutch sandwich. This is a complex tax avoidance strategy that involves routing profits through Irish and Dutch subsidiaries, and then to a tax haven. This strategy takes advantage of the different tax laws and treaties between countries to minimize the amount of taxes paid. Some governments also offer tax incentives to multinationals to attract investment and jobs to their country. These incentives can include lower corporate tax rates, grants, or other forms of financial assistance. Finally, some multinationals also lobby governments to lower corporate tax rates or create tax loopholes that benefit their specific industries. This can be done through direct lobbying or through industry groups that represent the interests of multiple companies. It's important to note that many of the above tactics are legal and have been used for decades. However, recent years have seen increased scrutiny and efforts to crack down on corporate tax avoidance. Some countries and organizations, such as the European Union and the Organization for Economic Cooperation and Development, OECD, are working to close tax loopholes and increase transparency in order to ensure that multinational corporations pay their fair share of taxes. Another tactic used by multinational corporations to avoid paying taxes is base erosion and profit shifting, commonly known as BEPS. This is a strategy where companies shift their profits to subsidiaries located in countries with lower tax rates, by exploiting differences in tax laws between countries. This can be done through methods such as charging high royalties or interest on loans to subsidiaries located in high tax countries. In addition, some companies use tax havens to register their intellectual property, such as trademarks and patents. This allows them to pay lower taxes on the royalties they receive from these assets, as they are considered to be generated in the tax haven country. Many multinational corporations also use aggressive tax planning to reduce their tax liabilities. This can include using complex financial structures, such as special purpose entities, to shift profits to subsidiaries located in low tax jurisdictions. They also use tax havens to create artificial losses that can be offset against profits earned in other countries. It's important to note that these tax avoidance tactics have a significant impact on the global economy, as they reduce the amount of revenue available for governments to fund public services and infrastructure. This is why there are ongoing efforts to address corporate tax avoidance, such as the Base Erosion and Profit Shifting (BEPS) project by the OECD, which aims to close tax loopholes and ensure that companies pay their fair share of taxes. In conclusion, multinational corporations use a variety of tactics to minimize their tax liabilities, including transfer pricing, offshore tax havens, tax incentives, and base erosion and profit shifting. While these strategies are legal, they have a significant impact on the global economy, and there are ongoing efforts to address corporate tax avoidance. Thank you for watching this video on how multinational corporations avoid paying taxes. If you found this video informative, please like and share it with others. And don't forget to subscribe to our channel.